Welcome to Module 4, everyone. This is the area where we're going to discuss the very popular subject of divergence. If you're new to divergence, well, let's start at the very beginning. What is it? Well, first of all, it's an important application of trendline analysis. We're drawing trend lines on MACD and price, and what we're trying to do is connect either tops or bottoms on both panels, but not both types concurrently. We're looking for opportunities to draw them either on MACD and or its histogram, and when we get both of those lining up at the same time, it can be very powerful. And these trend lines can be either horizontal or diagonal. You don't often see divergence examples kind of profiled in textbooks and so forth that have horizontal lines, but when you can draw a horizontal line on one panel relative to a diagonal line on the other, that's still valid divergence. So when the resulting trend lines, which we're going to show you how to draw in just a minute, when they're sloping in different directions, we have divergence. And this is an example right here. If you have an upsloping trend line on price versus a downsloping trend line on MACD, or of course a horizontal line on either of those two panels, but not both together. Conversely, if you have a downsloping trend line on price relative to an upsloping trend line on MACD, and we can mix and match those, and that's what we'll go over in the next few modules. But when you have trend lines that are going in the same direction, you don't have divergence. What you have is something entirely different. It's more like agreement between the two indicators, or convergence. So in a nutshell, at least, when we're talking about divergence, we're talking about trend lines going in different directions when drawn on MACD and price. So what I've done here is broken down the process of identifying divergence into different individual steps that you go through to flag them on your chart. So the first thing you might want to do is find things that look like swing points on MACD and or the histogram. So an example of that would be a high, a little bump on the MACD that's preceded by a lower high, or a high preceded by a higher high, and collectively these comprise tops. Another type you can find is a low preceded by a lower low, or a low preceded by a higher low, and these comprise bottoms, and I'm going to show you in the next graphic what we do with that information. With the swing points identified on MACD and or its histogram, what we do next is to draw trend lines that connect those points. So for back-to-back highs, we're always going to draw the connecting trend line, the trend line that connects tops, from above, obviously. I mean, you can't draw a trend line connecting these guys from below. It has to be from above. And similarly, for back-to-back lows, we're going to put a trend line underneath those swing points that connects them like this. So that's what the trend lines will look like on MACD. Here are some real-life illustrations that demonstrate those different templates we looked at on the last slide. The first one is a case of ascending tops. So we see what looks to be like a swing point high on MACD, this bump from above, and we look back and we find a lower high over here. In fact, you could have found one right here. But this is perfectly valid. These two connect. So we take a line, we just draw these 2 points connected from a top. In the case of descending tops, in this example, we have a high on MACD, and we work it backwards to the last or most recent high, connect them from above. And with the histogram, we have the same sort of action unfolding more or less concurrently. Now, one little side note here: when do you actually have a quasi-swing point on MACD? Well, the safest bet is to wait for a crossover, because if you're in the live edge of trading right where my cursor is, you don't know that this thing is going to fold back over and give you what looks like a swing point, even here or here. It's not till we have the histogram painting on the opposite side of the waterline that you're absolutely certain you actually have a swing point here. So that's something you want to keep in mind, is wait for actual confirmation of this bump with enough closes that makes it dead obvious. On the bottom here we have a low on MACD, and that's preceded by a lower low. So we connect these bottoms from below, and at the same time we have another case of ascending bottoms on the histogram. In this case, we have one individual histogram bar in each of these little waves that really sticks out as a really solid swing point. You can see this bar is surrounded by bars of lesser height below the waterline on either side, and same story here. So we can go ahead and connect those concurrently. And here's a case of descending bottoms on MACD. A swing low kind of setup here to the right, which is preceded by a higher low. So we connect those falling bottoms from below. So those are the four types in terms of what they actually look like with real-life examples from the MACD panel. The next step in our process is that once we've got the trend lines drawn on the MACD panel, we're looking to the price panel to see what's going on, to see whether there's an opportunity to draw a trend line of some type there. Now, the ideal situation is one where we have very clear, distinct Tom DeMark style swing points, either a swing high, which is a high on a candle that's surrounded on both sides by lower highs, or conversely, a low surrounded on both sides by higher lows. That makes it very easy to draw very mechanical looking trend lines. In reality, we don't always have that clarity. Sometimes we have to take some liberties. The swing points, you might have 3 consecutive swing highs that are the exact same level, or the swing points are kind of messy. So what we do is we kind of take some interpretive liberties, and what we're really looking for is just a general tendency of price to move one way over a period of time and MACD to move the other way. And I'll give you some examples of sort of sloppy trend line drawing that are still valid. So what we want to do is we want to draw trend lines connecting swing points on price the same way as we do it on MACD. So we're connecting tops from above and bottoms from below. Now, if you're a newer trader, newer to this technique, you want to keep in mind as you get started that you be careful not to mix and match the two types accidentally. You do not want to draw a line connecting bottoms on MACD and tops on price, and conversely tops on MACD and bottoms on price. It's always bottoms on both types of information or tops on both, but don't mix and match them, or what you'll have is just basically invalid divergence technique. Okay, here's a chart example that shows on one particular snapshot 3 different divergences, and we'll go through them one at a time, starting at letter A over here on the left. What we did is we found a swing low on MACD, confirmed by this crossover, this histogram bar painting in the opposite side of the waterline, and we looked backwards and found a lower low, and so we connected those 2 lows from below. Then what we did is we shifted our attention up to the price panel, and boy, did we ever get some major swing points here. These were crystal clear. There's just no missing these. They stand out like a sore thumb. So we've got a swing low on price here, and we just work backwards. We're not necessarily looking for a higher low. It's just whatever is the next swing point to confirm or refute a divergence. So fortunately, we had a really nice swing low here that matched up quite well timing-wise. You can see these respective start and end points of these trend lines are matching up pretty closely timing-wise on both panels. So we connect this low back to the last swing low, and what we see is the lines are heading in opposite directions. If this line was extended out, it would keep going up, and similarly this line is going to keep going down. So that is a valid divergence signal right there, and you can see what happened afterwards. We'll get into the implications of divergence later, but essentially this was a positive divergence and price rose. Then up to this kind of topping out process here, it's sort of looking like a mushroom top, I suppose, at least by the time we got over here. We had a swing high on MACD over here, and we worked backwards, and the next most obvious one in the background was here. So these are swing highs on MACD, and what we want to do obviously is connect those from above. So we take the line and just connect those 2 points. We then go up to price action and see what we can see. This is an example of taking some interpretive liberties. There's no really super clear Tom DeMark style trend line that matches up well enough timing-wise with this line segment. But you can go ahead and make the assumption that this is valid anyway, because price is generally trending up here. We have mostly higher highs. We have a higher high from here to here. We don't from here to here, but we do again from here to here and here relative to this prior swing high. So this is kind of loosey-goosey, and this would not qualify as a valid Tom DeMark style trend line, I don't believe. But this is rising prices, higher highs. So we're just going to go ahead and draw this line to reflect that fact. Now, subsequently, it got a little bit messy. We actually had yet another pair of back-to-back swing points on MACD. We had a high here preceded by a higher high here, the terminus of this previous line segment. So again, we look to price, and actually in this case, in this example, it's a bit more obvious, it's a bit clearer. We have a swing high here. This high is just a tad bit higher than here, so we can connect these two swing points, and that is a valid trend line on price. It's a rising resistance line. Which is not a type of trend line that Tom DeMark talks about, but there's actually 4 different types. There's rising and falling resistance and rising and falling support. This is a rising resistance line. So we can see, comparing the two types of trend line, MACD is falling, price is rising. They're heading in different directions. That is a valid reversal signal. So taken together, we actually have back-to-back divergence signals here. And I suppose if you really wanted to, you could kind of quibble with this idea here. Did we really have 2 divergences? You could have, if you wanted to, drilled up to a higher time frame, and you might have just found 2 individual swing points comprising a single line segment. Same here, but on this time frame, following our methodology, we had a high preceded by a higher high in MACD, and same scenario here. And we can see that price then fell off after this example of negative divergence. I've drawn in 2 orange-colored lines here just to demonstrate what divergence does not look like. And what we had is a little swing point bump on MACD, connecting backwards to a prior swing point. We drew the line, but we saw that the swing points on price were actually aligned the same way. So the 2 trend lines on price and MACD are going the same direction, which is not divergence. It's actually agreement or convergence between the 2 types of line. So those are some real-life chart examples of both positive and negative divergence, including back-to-back divergences, and what divergence does not look like as well. Most of the swing points on MACD that we've been looking at, the prior examples have been of the peak-to-peak variety. In other words, we have 2 very clear points to connect. But there's another type of divergence we can draw, which again is an example of kind of taking interpretive liberty. Here's a case of slant divergence. And by slant divergence, we mean that the histogram bars in this case are trending lower and lower and lower. It's a very clear trending process, but there are no 2 individual swing points that really stick out like a sore thumb for us to connect. That's okay. We're just trying to capture a very real slope on this indicator. And so we go ahead and just draw a line that connects as many of these descending tops on the individual histogram bars as we can. You could apply a fairly similar process to MACD itself. If there are no clear swing points, but MACD is obviously trending up or down in a direction that's contrary to price, for example, that is a possibility for us. Peak-to-peak divergence, again, being just that example where we have really clear swing points that we can connect. I always like to work with peak-to-peak better. It's just it's easier to find, it's easier to work with, it's clearer. But it doesn't really matter. Both of those types of divergence lines are totally valid on the indicator panel.